It's time for Jordan Dove's market pulse for the week of November 28th, 2022. I'm Jordan Dove and I'm your realtor's favorite realtor. And I hope you had a very happy and thankful Thanksgiving. I am thankful for you checking in on the show today because in about 12 to 15 minutes, you are going to know more about the real estate market and economy than 90% of the United States citizens. The goal here is to keep you informed so you can make educated decisions in your own financial bubble. And as always, you can get the market pulse. You can get it emailed directly to you every Monday, along with other little golden nuggets each week. If you just go to jordandove.substack.com and enter your email address, I want you to have that. So let's get started with last week's review. Stocks scored their second weekly gain in three as economic growth concerns took a backseat to positive economic reports and encouraging minutes from the Fed's last meeting. The minutes revealed, and I quote, this is a quote, a substantial majority of participants judged that a slowing in the pace of increase would likely soon be appropriate. This supported hopes the Fed would dial back to 0.5% rate hike in December. But disappointment came with higher jobless claims and lower preliminary reads on manufacturing and services, but new home sales, durable goods orders, and the University of Michigan consumer sentiment all beat estimates. And to me, it is truly amazing in this market because there's good news, there's bad news, there's good news, there's bad news. It's above the estimates. It's below the estimates, but did you realize it's never at the actual estimate? It's absolutely crazy. We quote the smartest financial minds in the country. Did you guys notice that it's never on target? The week ended up with the Dow Jones Industrial up 1.8%, the S&P up 1.5%, and the NASDAQ up 0.7 of a percentage point. Bonds experienced a positive week, up 1% overall, and the UMBS 5.5% up 13 to $100.27. The national 30-year fixed mortgage rate edged down after its big plunge the prior week in Freddie Mac's primary mortgage market survey. And guys, please remember, mortgage rates can be extremely volatile. They change day to day, minute to minute. So check with your mortgage professional like Chuck Barone with Right Choice Lending. You can even send him an email at askchuckbarone.com for up-to-the-minute information. And make sure to check out his show every day, Monday through Friday at about 2:30 Pacific Standard Time over on his YouTube channel. So let's move into our economic notes, and there are some interesting topics here to discuss. First, we're going to start with the Federal Reserve Governor, Christopher Waller, said on Wednesday that he is open to reducing the level of interest rate increases to 0.5 percentage point in December, and he quoted as saying, "But I won't be making a judgment about that until I see more data," he said at a speech in Phoenix, where he also vowed not to be head faked by an encouraging inflation report last week. In other news, the collapse of the crypto exchange FTX will be the subject of a hearing in Congress this week, one of what's likely to be many public inquiries into what went wrong at the entity founded by Sam Bankman-Fried. The Senate Agriculture Committee will hold a hearing this Thursday at 10 a.m. featuring testimony from Rostin Benham, chair of the Commodity Futures Trading Commission. This panel is headed by Senator Debbie Stabenow, who's a Michigan Democrat who has co-sponsored legislation that would give Benham's agency regulatory power over the crypto industry. Regulatory power. Senator John Boozman of Arkansas, the Agriculture Committee's top Republican, is also a sponsor, so there is bipartisan support for this bill, and it appears that crypto is heading towards federal and financial regulation. Deutsche Bank sees 2023 recession with markets plunging about 25%. The financial institution stated in a client note, we see stock markets plunging 25% from levels somewhat above today's when the U.S. recession hits, but then recovering fully by year-end 2023, assuming that the recession lasts only several quarters. For quarter one, the bank believes that the bear market rally should continue. Turning to the second quarter, markets should remain mostly flat with slightly lower as recession fears build. The third quarter is 2023 is where Deutsche Bank sees recessionary factors kicking into gear. In this environment, the firm projected that markets will most likely be down significantly, with the S&P hitting 3,250. As for quarter four of 2023, the firm sees a quick recovery, with the major averages bouncing back from recession lows. In other banking news, banks are leveraged, or are they over-leveraged? Let me know. With quadrillion dollars in derivatives. This is the total notional value, not the market value, which is the total amount of a security's underlying asset at its spot price. The notional value distinguishes between the amount of money invested and the money amount associated with the entire transaction. Now, this value, it's calculated by multiplying the units in one contract by the spot price. So I'm going to give you an example. Assume an investor wants to buy one gold futures contract. The futures contract costs the buyer 100 troy ounces of gold. If gold futures are trading at $1,300, then one futures contract has a notional value of $130,000. To plan for the future, one has to take into account all the liabilities and tally them with assets to see whether they balance, and only when they should one consider his or her position financially sound. In conclusion, debt comes due someday or the other, and hence all sectors and all levels of the economy must be prepared for the financial reckoning that could be ahead. And this is something, the derivatives market, that we should definitely be keeping our eyes on. We've also been keeping our eyes on the Treasury bond yields and the inverted yield curve. You guys know that mortgage rates are closely followed with the 10-year Treasury bond yield, which is down 12.9 basis points from last Monday's reading to 3.711%, and it is still inverted with the 2-year Treasury yield, which is down 9.2 basis points from last week to 4.473%. However, there is currently a 76.2 basis point spread, which is larger than last week's of 72 bips. This is abnormally large, and historically, larger 10-year, 2-year spreads indicate a harder, longer recession. And this is actually the largest spread since 1981, and we know what happened during the early 1980s. The 30-year is down 15.5 basis points to 3.753%, and the 5-year is at 3.899%, which is down 12.7 basis points from last week's reading. So now we're going to get into the national housing market update. Now, the Southern Nevada Housing and Real Estate Market Report is separate, and that will be out this Wednesday on the channel. So please make sure to subscribe if you are interested in what's happening in the greater Las Vegas metropolitan housing market. Really interesting to watch what is going on here. Now, there was a surprise in new home sales in October, increasing 7.5% to a 0.632 million unit annual rate. Sales are still down a bit from a year ago, but it looks like market activity might be beginning to stabilize. It appears that incentives from the builders are working as they try to keep the higher prices in line by locking in lower mortgage rates, by using the builder's lender, and throwing in some of those free upgrades. Now, listen to me. If you are looking at new construction, make sure to use your own realtor. Do not work directly with the builder. They work for the builders. They work for the builder's best interest, not yours, and builders' contracts are confusingly convoluted, and it's by design. Agents will be able to help you negotiate on your behalf and may be able to get you even more incentives and protecting your rights as a home buyer. Now, speaking of new construction, I want you to make sure that you hire your own home inspector and not the one the builder uses during your final walk of the property, where you're going to go and put up blue tape to mark imperfections or mess ups. New homes may have issues as well, and it's well worth spending the few $100s to hire your own licensed inspector, again, that works for you and not the builder, to take a deeper look at the construction. If you find out that there is underlying issues before you close on the property, you can have those items fixed by the builder prior to moving in. It's very, very important, so please keep that in mind. And if you have any questions, feel free to reach out to me. I would love to help you. So let's get back into some new home stuff. The median sales price of new houses sold in October 2022 was $493,000. The average sales price was $544,000. The seasonally adjusted estimate of new houses for sale at the end of October was $470,000. This represents an 8.9-month supply at the current sales rate, which indicates a strong buyer's market. The inventory of completed homes has started to rise, and this additional inventory is helping a decelerating trend in home prices, which is also helping affordability because mortgage rates recently dropped about 50 basis points. That's 0.5%. That drop in the mortgage rates has driven up demand a little bit, as mortgage applications were up 2.2% for the week ending November 18th after booking a 2.7% gain the week before. Even refinance demand increased 1.5% for the week. Now, little did you guys know that Realtor.com reports active inventory keeps growing, and it is now 45% ahead of where it was a year ago. Buyers are still getting more choices as well as more time to choose. So since homes spent 8 more days on the market than this time last year, and that time only appears to be increasing. So I think we're going to see homes sitting on the market longer. Now that wraps up the national housing market update, and we're going to get into this week's predictions. And we are predicting this week that we are expecting October pending home sales to recede, though less than the month before. Construction spending is forecast to be off a bit, but we'll look at the residential part. The Fed's favorite PCE prices inflation measure should still head up, but personal spending is expected to show consumers are still staying in the game. The ISM Manufacturing Index is expected to be in contraction territory, but non-farm payrolls should post a moderate gain. Now, we've been forecasting Federal Reserve policy changes in the coming months, and Wall Street expects the Fed to hike the rate by 0.5% in December and February, followed by a 0.25% bump in March, with a 100% consensus of at least a 50 basis point hike at the December 14th FOMAC meeting. All right? Let me know what you guys think. But to wrap up the show, we're going to give you the real estate tip of the week, and it's titled Home Sweet Home and the Emotional Benefits of Being a Homeowner. And while you know there are many financial perks to owning a home, there are also powerful non-financial benefits to consider if you were thinking about a move. Home ownership is going to allow you to express yourself through home customization, which you can use with your unique sense of style. It gives you greater privacy and comfort by having a space that's truly your own, that you own. It enhances your connection to your community and loved ones by being a part of a broader social group. And it's an achievement that you can feel proud of. You can feel proud of it, and it can create wealth for you and your family and for your future generations. So guys, if you've been on the sidelines to buy real estate, you should start getting ready to do so. It's a great thing. I think there, in my opinion, there's going to be some great opportunities. So that's it for the show today, guys. If you have any questions, please feel free to reach out and contact me. Do you know somebody that's looking to buy, sell, or invest in real estate? Please reach out to me and send me their contact information so I can help them. If there's any questions you have, call me, text me, email me anytime. Thank you guys so much for being here and supporting the show. I really appreciate you guys. Make sure to check out the Las Vegas and Southern Nevada housing market update on Wednesday. So smash that subscribe button and tap that like button on this video. I would appreciate it. Thank you guys so much. Have a great week.